Good evening, everyone, and welcome to Admiral Markets webinar of 3rd of September 2014. My name is Nenad, and I will show you today different approaches to breakout trading. Actually, I will show you how to properly do breakout trades, because breakouts can be a bit nasty if you don't know how to use it properly. Before we begin, our standard risk disclaimer. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Online educational materials are developed by Admiral Markets AS Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting, conditions, and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. In this case, in no way it represents the actual suggestion for the trade. These are not MUK's opinion, and the website in the video is not a .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only. This webinar is informational and educational purposes only. So with having said that, we are going to talk about what are breakouts, why and when to trade breakouts, which patterns you should trade, how to trade it, and I will show you again a couple of examples of measuring the strength so you can potentially find the target of that breakout. So the main accent on today's webinar will be how to trade three different ways. So there are three different ways to trade breakouts. We are gonna trade, when we do breakout trading, we are gonna trade head and shoulders, inverted head and shoulders, but this will be left for another webinar because there are basically not breakout patterns in its own sense, only if we trade neckline break. But I have also, I don't know if other traders do it, but I have personally traded head and shoulders and inverted head and shoulders a little bit differently. Triangles, no, I don't, Vegantas, I'm not scrolling slides. I'm showing you just agenda, if you see this screen. Triangles, flags, pennants, wedges, and daily highs and lows. Okay, do you see now? Do you see my screen now? Is it okay? Okay, great. So, head and shoulders, inverted head and shoulders, which will be left for other webinar. Triangles, flags, pennants, wedges, daily highs and lows. These are things, and these are patterns which we use for breakout trading, mostly flat top, flat bottom triangles. Then we use flags and pennants. Then we use wedges, and of course daily highs and lows. Most of those patterns are tradable by three different ways, which I will show you in this webinar. So what are breakouts? A breakout is what occurs when prices exceed previously determined support or resistance levels. Long positions are triggered when prices move above resistance, while short positions are signaled when prices drop below a clearly defined level of support. Breakouts on longer time frames create more significant changes. Breakouts on shorter time frames have more impact on day trading. So if you day trade, then usually 1 hour and below can be traded by different breakout patterns. Also, the thing is I need to mention that breakouts are usually trades which are generally can be safe if there is market volatility. But if there is no volatility in the market, then we can experience a problem. Because if there is no volatility in the market, that can be fake out. And fake outs are traded different than breakouts. So if you want to trade breakouts properly, you need to know that you need to have a nice volatile market. In other case, your trade can be bad. You can be stopped out shortly. That is the truth about breakout trading. So only volatility is needed. Huge momentum spikes can lead to very fast profits. Breakout trades tend to be the fastest way of making profits if you do it on a trigger-happy trades. I will show you later trigger-happy trade. London breakout is typical example. Orders which have been accumulated in Asia session, we actively trade those orders, because if levels of support or resistance breaks during the London Open, that means that that accumulation has become effectively a breakout, a distribution. So we usually base our trades in early London and on London Open. We can trade breakouts also when there is no trend prevailing, but there are still levels which we can trade. That is done usually on lower time frames. You can trade 5 minutes with this also. Now, the important thing to know is that breakouts do stop grabbing. Breakouts do stop grabbing. What it means is, I will show you now in a couple of seconds. Let's say that you are long. You're long, okay? And the price is going up. Now, when you close the price, what your platform does is automatic sell into the market. So once you close your trade, your long trade, that becomes automatic sell into the market. If we have a lot of closes, if we have a lot of close, ending of positions, closing of positions, scaling out, that will make significant retrace. Okay? That is the thing. So once the price reaches important resistance, if you close your order, you will sell into the market. Also, if other traders do the same thing, that will create a retracement, which is used to buy the price at better, to buy the currency pair at better price. Now, the thing is, if we have matched those order closes or position closes, that will create a significant retracement. So once the level breaks, it can be a fake out. You need to learn how to protect from those fake out trades, because probably many of you have traded breaks of daily highs and daily lows. Let's say that this is resistance, and you see that price has been trying to break this resistance all day long, and suddenly at London close, or I don't know, just after London close or during the London New York session, price breaks finally that level. Your trade goes 5-6 pips in profit, then instantly comes back. If you forgot to close your order, then you're in a loss, because that was a fake out. Okay? And you traded trigger-happy trade. So the important thing to know is, always when it comes to breakouts, it will also come to stop grabbing. So I have told you the long example. It's the same for shorts. Every close of a short position is automatic buy into the market. Also, stop grabbing occurs when, let's say, daily support has been broken and many orders which have been placed below this support have been collected. So once those orders are collected, the price immediately starts to accelerate in that direction. Now, if we have many orders below the support, that will only accelerate the price to the next support. That is good for breakout trades, because that can give us fast 5, 10, 20 pips of profit. So when to trade breakouts? We can trade it a London Open, which is usually a good time to trade breakouts. Then we can trade also New York Open, and basically when there is a nice breakout pattern forming, you can try to scalp it, because effectively breakout is a way, if you do it on lower time frames of course, that is essentially scalping. Okay, so breakouts I can say are a form of scalping unless you're using breakout retest or breakout pullback continuation way to trade breakout. We can also do scaling in. So let's say, for example, that you used pullback to enter a long position. So you are long at this point. This is resistance. Okay, this is resistance. So the price is going up, 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 up. You are still in the trade. You don't close your trade. Then suddenly this level breaks. You can go with Triggerhappy Trade, effectively having double the position. You can close your Triggerhappy Trade here, not waiting for retest, and you can still leave your order running. So effectively, you're basically scaled into a breakout. Okay, so why scale in? Because you already had your position opened, and this was your second position. So effectively, you use scaling in. When there is no trend, you can try to do breakouts, but very, very limitedly when price is ranging, because you don't know whether the price will continue to give you 15, 20, 30 pips, or it will come to 5 pips and then reverse into a range. Usually, if you spot a big range on higher time frames, once that range is broken, that can lead to significant breakout, even 100 and more pips. But for that, you need to go and visit higher time frames, not 5-minute charts. Okay? Every of those chart patterns, double top, double bottom, triangle, wedges, pennant, every single of those breakout patterns are tradable, guys. Okay? Double top. You know what double top is. When price is trying to break this level and unfortunately it cannot break it, then that is double top. The same thing applies to double bottom. Triangles, this is symmetrical triangle. This is flat bottom descending triangle. This is flat top ascending triangle. This is bullish wedge, because you are experienced, you are waiting for breakout in long direction. This is bearish wedge, because you're waiting for breakout in to the downside, short direction. Okay? Then you can trade flags, pennants, so on. Many of those patterns can be traded. Of course, head and shoulders and inverted head and shoulders are different. So I will make a special webinar about head and shoulders and how you can do multiple trades with head and shoulders, not just what Forex, classical Forex trading teaches us. We can do multiple trades with head and shoulders and inverted head and shoulders. Now, how do we trade breakouts, actually? How do we trade those breakouts? We have 3 ways to trade breakouts. Triggerhappy trades, breakout retest, and breakout pullback continuation trades. So effectively there are 3 ways how to properly trade breakouts. Okay? Triggerhappy trade is a trade which I will be using the same. This is basically flat bottom descending triangle. And usually when you see flat bottom descending triangle, you want to take a trade in short direction. Because when we see this trend line and we see this bottom line, we expect breakout to happen in short direction, contrary to flat top ascending triangle. Because on flat top ascending triangle, we have flat top, this is flat bottom, and a trend line which is ascending. So we usually are waiting for breakout in trend direction, in long direction. In this case, this is Triggerhappy Trade. So once the price breaks through this level, we immediately take the trade. So I know that that was usually the pattern, the kind of trading which you have taken the most, or which you have been taking the most. I know that most of you, when you see that something has broken out, you immediately take the trade, not waiting for retest or continuation. So that kind of trades can be profitable. Usually they are profitable for 2, 3, 5 pips. But sometimes those trades are inconsistent. You're not sure where those trades will break out. Where will they go? Now I will answer your question. Don't worry. Milorad is asking, you say by few pips, but what on time frame? It doesn't matter which time frame is that. Why? Because you're trading Triggerhappy Trade. The thing is, okay, 5 minute triangles have usually the same reaction as 15 minutes. They're not so reliable. But those are still Triggerhappy trades. So you're basically trading the price in this case. So let's say this is 31.80. It's the same on 5 minute, okay? It's the same on 1 hour. 31.80 is the same on 1 hour and on 5 minute. It doesn't matter. But now, you can spot this triangle on 5 minute, but also maybe it could be also spotted on 1 hour, or maybe just on 5 minutes, or maybe just on 1 hour time frame. But still, 31.80 is the level which you trade. Why? Because you're going with Triggerhappy Trade. You're not, I will show you later, breakout retest and breakout pullback continuation. And usually, now, if you're looking on 1 hour time frame and you see that there is still room to next support and that ATR is lower than 80, then you can have, I don't know, 10, 15 pips on that first breakout until the price starts to retrace. But the thing is the same. Triggerhappy trades are not so, I need to say, from time to time they can be profitable. But if you get into a bad Triggerhappy trade and the price effectively retraces into the triangle, then what? Then the problem is that you don't know what to do. That is the case with Triggerhappy trades. Trading breakout retest, which I'll show the next, and breakout pullback continuation, which I show later, is not the same as on different time frames. I'm only talking about Triggerhappy trades. Okay? Because you're effectively trading the price. Breakout 31.80, 31.78, bang, we go down, and we either take the profit or we're in a loss if the price makes it through here, because it can break out in this direction. So that is why I'm always I give you usually advice about trading those patterns, chart patterns. Triggerhappy trades yeah, they can be good. But if you spot descending flat bottom triangle, you should try to take a short entry. I'm not saying that this flat bottom descending triangle cannot give us a long trade. I'm saying that if you're trading flat bottom descending triangle, you're basically trying to take short position, because you will go with the trend. This trend line gives you the trend, and this is support. It's vice versa for flat top ascending. It's much safer to trade to the long side. But generally, trigger happy trades are fast, but they're not so happy, you know. It's just called trigger happy because you are pulling the trigger and you are, well, you want to be lucky one, happy one. Initial stop loss is almost the same for every of those trading ways. Let's say that you have price like this. Okay, and it breaks here at this point. There have two ways to place your stop loss. There is conservative way and there is aggressive way. Conservative way is to put stop loss here. Aggressive way is to put your stop loss here, just a little bit higher than this first swing breakout. Because this is the breakout point from this price to this price. You can be usually safe if you place your stop loss here. Or you can go very aggressively to put your stop loss there. So you need to count the risk, okay? Okay, if my risk is 0.5% in, let's say, this trade, okay, I may go with 0.3 lots if I place my stop loss here, okay, or I can go with 0.1 lot if I place my stop loss here, okay. Traders usually cannot differentiate between risk and risk to reward. Risk to reward is not so important, I need to say. Today, in these market conditions, risk to reward is not important. I am a positive trader. I have made more than 22% since the inception of Camarilla, more than 12% in last 3 or 4 months. And the thing is, my risk to reward is not the same as other teachers or mentors or traders do, because when I trade shorter time frames, it's very hard to get 1 to 2, 1 to 3, 1 to 4. Why would I need 1 to 4 risk to reward? I don't need it. I just know how to place my risk, where to place my stop loss. And I'm using trailing stop. If you use trailing stop, it's very rare that you can get, I don't know, 1 to 3 risk to reward if you're using effectively trailing stop. But trailing stop is very helpful if you want to do intraday trading. You can see these market conditions are not perfect. This is different market. This is not the same market as it was 5 years ago. So you need to adapt to present market conditions. If someone teaches you how to trade always at 1 or 2, 1 to 3, I don't know, will you be profitable or not? I'm not sure that you will be profitable. Or you may be profitable in 2, 3, 4 months, but you need to be profitable all the time. That is the point in Forex trading. So what I'm trying to say, you can place your stop loss here, of course, but that is very aggressive. You can place your stop here, which is aggressive. And you can place your stop here, which is conservative. Now, if your risk is 0.5, you need to incorporate number of lots which will respect that 0.5 risk is if your stop loss is hit. If your stop loss is hit, if your stop loss is hit. Why? Because you are effectively basing your trades on how much you are willing to lose. You don't know how much you will gain, but you know how much you are willing to lose. Okay? Is it possible to place an even tighter stop at a breakout line? Yes, but how would you do that? Let's say that the price has broken. I will use this example. This is 31.80, okay? And now, bang, the price goes down. So you enter at 31.78. What happens is the price comes to 31.72. And now you can place your stop loss at 31.78 or 31.77, basically giving you a free ride if momentum persists. Now, if you want to place stop loss, initial stop loss here after the breakout, what can happen is the price may come, retest, because sometimes retests are not perfect, effectively hitting your stop loss and proceeding down. So I would never advise placing your stop loss here or here when you do trigger happy trade or any breakout trade, because there are retests and continuations. But stop loss is best placed conservatively using lower lot size for the same 0.5 risk. Or you can go with the aggressive. Overly aggressive, very aggressive stop loss, I'm not fan of that. I don't recommend that. Okay? The second, sorry, this is the problem. I will pause the screen for a brief moment. Microsoft PowerPoint has stopped working. Sorry, guys. This is good now. Okay, sorry for this. This is, oh well, it happens from time to time. Okay, so that was about trigger happy trades. Now, this is called breakout retest. Okay? Now, you see, Milorad, this is the answer to your question. If you placed your stop loss here at this line or at this line, very often can happen that price breaks out and then retests this breakout point. What can happen is it can spike your stop loss because, you know, market is not so perfect, so it can go couple of pips just to spike your stop loss and then proceed down. So the thing is, this is trigger happy. If you wait for retest, yeah, like Cable did yesterday, yeah, I'm telling you, it can be very nasty. So this is the example of breakout retest trade. Once the price pulls back to the, I don't know, 1 point below this support, it can come to retest again this breakout lower line of this triangle. If you take a short entry at this point, usually you wait for this price comes down, then retraces, and it starts to wiggle around this point, so you can consider this is a retest. If you take the trade here, that is called somewhere close to this region or at this region, that is called breakout retest trade. Now, if the price continues after the breakout pattern, it's called breakout pullback continuation. So this is breakout, this is a retest or pullback, and 2 pips below breakout point, if the price breaks this point by 2 pips, it's called continuation trade. So Taking the trade immediately after the price breaks lower support, usually by few pips, is trigger happy trade. Breakout retest trade is taking the trade after the price retests support. And, sorry, I will correct this. This is breakout pullback continuation. Okay, so breakout pullback continuation is 2 pips below the breakout price. So you're not waiting for retest, you're waiting for BPC pattern. So breakout pullback continuation 2 pips below this point. Now generally this was assumed to be the safest trade of all breakout ways to trade, different ways to trade. But the thing is, breakout pullback continuation, first of all, it's not so reliable on lower time frames, and second of all, guys, as I said, market has changed, and lower time frames, even 1 hour time frame, sometimes is not enough to give us proper breakout pullback continuation trade. Why? Because usually what happens is the price breaks out, it retests, it gives you continuation trade, but it cannot be a good continuation trade. Just because the market is in low volatility mode. Okay, low volatility mode. Sorry. So if the market is in low volatility mode, that can be very, very, very dangerous for breakout pullback continuation trades. Really, I'm not a fan of this. I need to say, back in time I was, because it worked. You could have traded breakout pullback continuation patterns a lot. But the thing is, in today's market, present market conditions, I'm not so sure. I rarely take BPC, usually retest, or if I see the chance for BPC, if there is still, let's say in this example, if there is still enough room to the next support, then we can take it. But if next support is here, it's usually because of low volatility, pivot point, then retest trade is the best option. So you need to differentiate between these 3 ways to trade breakouts. Now, you need to have experience in that. I cannot tell you generally. Let's say that you spot a triangle on, I don't know, which pair and which time frame, and you ask me, what should I do now? You need to get feeling for that. I personally want to see retests. I usually go with retests. But needless to say, sometimes trigger happy works, breakout pullback continuation works, but the thing is, this is a must for breakout pullback continuation. You need to have enough room till next support. Because I don't like if price, let's say this is 1 hour time frame, and let's say from this point to this point is 25 pips. Now, you see, if you traded this from here, you would have made 25 pips. Continuation was assumed to be the best one, but that was back in time when when currency pairs did 300 pips per day. Today, sometimes it's 50, it's 100, it's 60, so BPCs are not so good as they were back in time. So let's imagine this is 35 pips from this point to this point. And now the price breaks out. You didn't take the trade. You didn't take retest trade. Neither trigger happy and retest. But you want to take this trade here. So effectively you will be having 8 pips till next support. So that is why you need to use common sense. Mechanical systems and mechanical ways to trade forex market are not good. You need to use your mind. You need to use your brain. If you have 8 pips till next support, of course you wouldn't take breakout pullback continuation trade. But you can take breakout retest, and sometimes even trigger happy if there is momentum in market. But breakout retests are usually the best. So resume for trigger happy. Very fast, but can be dangerous. Why I'm saying very fast? Because if they go in your direction, they will give you the quickest pips ever. Those trades can last a couple of seconds. If they give you, if you experienced trigger happy trade on a big momentum, wow, you can make a whole lot of pips in mere seconds. The fastest way to make pips is definitely trigger happy. But it's also the fastest way to lose your nerves, because if it pulls back and you have taken the price when it's too high or too low, then you're in trouble. That is why I prefer retest trades for breakouts and, of course, my trend trades, which I wait for breakout, okay? So these kind of trades can be good. Breakout retest trades. First risk to reward is okay. You are effectively selling when the price has pulled back, did a pullback, and you're effectively, but trigger happy trade can be selling too low or buying too high, which I really don't recommend, guys. I never would recommend you buying the price too high or selling the price when it's too low. So in between, breakout trades can be done, as I said. You need to know the ATR of the currency pair. If ATR of the last 7 days is lower than 80%, then you can usually use breakout trades. When ATR of last, let's say, 7 days is lower than 40, 50%, it's even better. But you know, if ATR is more than 150%, and you want to exploit breakout, then you can be in problem. Because the thing is, if the price breaks to your direction initially, it will stop here and come back in the range. And probably next day it would retrace. Maybe next day it would come lower, but your stop would be hit probably. Of course, you can ask me. I will answer you as soon as I finish with webinar, but you can think about your questions now. So, trigger happy are very fast, the fastest way, but can be dangerous. You can go with fake out mistake. That is fake out. Price initially breaks, then pullbacks, but pullbacks here in this region. So imagine trigger happy trade. You have basically sold into very first break of the lower trend line, but then the price quickly went back and go upwards. So that is called fake out. So you need to treat trigger happy trades as scalp entries. Okay? So those are scalp entries. Those are not intraday position trades. So treat it as scalp trades, guys. Not intraday positioning. Best opportunity, breakout of Asia, London and New York range, daily highs and lows. That is usually the best opportunity to trade by trigger happy trade. Breakout retest is more secure than trigger happy. Price, but the thing is, price does not always pull back. So you need to, well, basically think, or you need to risk. What I think I'm saying, you need to risk by waiting. You didn't take any trigger happy trade, but you now want to wait. So you don't know whether the price will pull back or not, but you effectively want to trade properly with retest. So contrary to trigger happy trade, price does not always pull backs. Best opportunities: flat top triangles, flat bottom triangles, and rectangles. Okay, so price does not always pulls back. It does not always pulls back. Generally it does, but not always, okay? So the thing is, trigger happy is the fastest way. It's not the best way, but still it can give you pips. But it's not the way which you should trade always. And the thing is, breakout retest is safer, but the price does not always pulls back. Best opportunities: flat top triangles, flat bottom triangles, rectangles. Rectangles are also patterns, usually range patterns, and you wait for a breakout. Now, how to measure breakouts? Just a quick reminder: if you want to trade, let's say, flag or pennant, you need to find a pole, and usually this is how you determine the breakout. So in this case, you see, this is a good example. We had a fake out. This was trigger happy trade, but you could have made some 10 pips probably. But you see the price didn't retest this level here. It retested the lower level. And then bang, it proceeded to the upside. Okay? So the length of flag pole can be applied to the resistance break or support break of the flag pattern to estimate the advance or decline. Measure the number of pips and add it after breakout. Wedges, this is good example. This is the example of breakout. Look now, this is trigger happy if you enter here. Watch it. This is breakout retest, and at this point, this is breakout pullback continuation. These kind of things work like a charm if they happen. So breakout trigger happy trade here, breakout retest trade here. 2 pips below this level here is breakout pullback continuation. Or you can also trade it like this. If you have these weeks, this could be the low, so you can go with breakout pullback and continuation below this point. Same example here, great one. Breakout, trigger happy. Breakout retest at this point and continuation trade at this point. When you come with situation like this, you see this is a little bit steep trend line and this is bullish wedge. So you can place your trend line here, and that will basically give you breakout retest point. So trend line here, breakout retest continuation. Okay, is this clear to you guys? Because if you see this level here, this line here, it's very hard for the price to come like this and go up. So what you do is usually, I do it like this. Mark these highs here. Look how good this is. Effectively, this was the retest of this line, which was holding the price from further up. Okay? Now, ATR, what I was talking about, look at this. 48.73. There is still room, some 25 pips. So you can go with breakout of daily highs and lows if you have still room to next resistance or support. In this case, there is, if the price breaks this daily low. So these are the things, guys, which I intended to show you. Now, if you have any questions, do not hesitate to ask me again or ask me. The thing is, yeah, I see the question. Do you trade stop and how when the trade goes in your favor? It depends. I, Milorad, use Camarilla MACD, my proper proprietary method for trading. If I do with scalp trades, then I can grab 5, 6, 7 pips, and then I can put trailing stop up to 5, 6 pips. If I use 1 hour trades and there is still momentum in the market, I can place my stop loss after 15 pips. But you know, it's a bit of my judgment. If I see that the price has broken 15, 16 pips, 17 pips, then I usually put my stop loss at 15 pips. But if price breaks 15 pips and then drops for 8, 7 pips, then I won't lose my trade. I will put my stop loss to break even. Okay, or I will make a trading stop at +5. I don't want to give anything to the market. Okay? It depends. If I use counter trend trades, again, it's differently. It's not the same for breakout, counter trend, and scalp trades. Those are treated differently, but all of those ways to trade are capable with Camarilla MACD. So you can trade 4 different market conditions: scalps, trends, counter trends, breakouts. And there are still, everything is different. But usually I trail my stop in every single of those trades. And if I do breakouts like this, of course I would trail the stop after 15, 16 pips. Or maybe I would put my stop loss to break even after 12 or 15 pips. It depends. I need to watch the price. If I see that price is breaking through the resistance, why would leave my trade? This is a good example. Of course, this is next resistance. Now, if I see that the price is breaking through this resistance, once it breaks to the upside, I would place my stop loss around this level. So you can see, I would be in trail stopped. If I would have waited, I could get 2 or 3 more pips, but it's not normal to wait, 10 hours for. It's always better to place trailing stop and wait for the price. Even though if it means less pips to you, well, you're trading 20 pairs. You're not trading a single pair. If you trade only 1 pair, that can be then maybe a problem. Where can I get this ATR and the indicator and text for the webinar? You're a great mentor. No problem. If you are Admiral Markets trader and you're trading a live account, please send me an email. I can give you this, but you need to be, because I use this for premium webinar. So if you are a premium member and you're having a live account with Admiral Markets, I can send you this one. But if you don't have a live account with Admiral Market, unfortunately, this is reserved only for premium account holders. So this is my mail. Great. If you are an Estonian live Admiral Market client, great. You just send me your number, it would be okay. So tarantulafx@gmail.com, I will send you this indicator, no problem. No problem. You just send me an email, okay? Or what else? Let me see. Do you add on positions and where on trend trades? Well, Milorad, usually how can I describe this? I don't make scale-ins, I personally. Because usually what happens is, let's say I want to trade this breakout. Let's say I want to trade a trend. I will use this example. And let's say this was the high, this was the low, and let's say the price pulled back to this region. So I'm making a trend trade. Once I'm in, my money management is, I don't say I don't know, some traders do it differently. I don't do scale-ins. The thing is, I place trailing stop after I'm in a profit. Now the thing is, the price can continue to go lower. What I can do is I can add another position only if I spot a valid breakout trade. But usually on trend trades, I do not add any positions. That is not my style of trading because my risk is very small. I'm not risking much. Really, I'm not risking much. And the thing is, I'm trading 25 different pairs. Okay? So I'm not into the mood of adding positions. If you trade so much pairs, it's almost complete Forex market on our platform. Why would I need to add? I usually have 5, 6 pending orders waiting to be hit. If you watch my session recaps, you know what I'm talking about. Usually there are 4 or 5, 6 different pending orders. And sometimes, very often, I need to see whether that pending order is still qualified, and then bang, I'm in a market order maybe sometimes. But if you trade 25 different pairs and you trade intraday, don't forget, you trade intraday, then you see 70 pips. Why would you add a position if its average ATR on this example was 70 pips? Now let's say you made some pips, but the price already made 50 pips. Would you really add a position to make another 20 pips? That's greed, and that is not okay. Okay, greed is your enemy. So don't be greedy. Don't add if you don't have to. Use a proper risk size, because proper risk size will save your account. I'm not saying you need to be profitable each month. Well, banks are not profitable each month if they trade forex market. I know that personally. That I know some traders which were trading in banks and there were huge losses, believe me. But the thing is, in the long run, I know 5, 6 months, you should be profitable, and also your account should not be compromised. That is why you need to place your risk properly. And that is why it's not advisable to add if you don't have enough room to next support. And usually those intraday trades, they are a bit of, when market is not so volatile, it's hard to get good scaling ins. But if you're trading on 4-hour time frame, then it's okay. So guys, I don't see any questions. We can safely assume this webinar is over. Let me show you just a few reminders. If you have not, still, if you didn't or you haven't registered for premium webinar, please do so, because I will be giving swing point indicator and now round number indicator. Swing point indicator is the indicator which marks swings for you, and round number indicator is indicator which will give you and mark round numbers for you. I will show you how you can use it on your charts and why they're good. So register for this webinar. Also a lot more webinars to come. As always, weekly Forex recap. We had a nice week. Well, Euro dollar was good, Aussie was bad, Euro was good, GBP was good. So great. Thank you guys for listening to me. Thank you for questions. And I will talk to you soon. Cheers, and I wish you many green pips. Thank you.